and welcome to this Think and Link series channel. I'm your host, Srinivasan, and today we are going to take a look at the Indian banking sector, how it has performed in FY24 and its outlook in FY25. So, what we are going to essentially do is we are going to look backwards and then forward and get a holistic view of the banking sector. We will start with the reference point of Bank Nifty. In FY24, Bank Nifty logged a gain of 16.04%, as against the gain of 28.6% in Nifty and 24.85% in Sensex. So, Bank Nifty has clearly underperformed. Now, if you take the till date performance of Bank Nifty for this calendar, when I say this calendar from Jan 1st of this year 2024 till date, Bank Nifty has gained 3.50% as against Nifty 50, which gained by 3.87%, and Sensex, which gained by 4.70%. So clearly, again, Bank Nifty has underperformed. Having said that, let's take a quick look as how the banking sector as a whole performed in FY24. And obviously, whenever a particular financial year closes, in the beginning of the new financial year, it's quite obvious that we have to look back and find out where we have performed well, in which areas have the performances gone. So, on the whole, if I were to tell you that the banking sector's performance in FY24 has been reasonably good. That too, after a spate of almost 4-5 years, the banking sector has finally turned around and it is providing synergetic inputs to the Indian economy. So let's start with the deposit growth rate. For FY24, deposit growth rate has been around 13%. Of course, wholly inadequate as compared to the increase or the robust credit growth of almost 20% in the credit portfolio of the banks. The deposit rates have been repriced in certain cases, but deposit has not really grown the way that banks would expect it to grow. Simply because there have been a lot more instruments available which gives more than adequate return as compared to the bank returns. One important thing that we notice in the robust credit growth was there has been a lot of growth momentum in retail and business loans. Whereas there has been a moderation in unsecured loans. And obviously so, because you may be aware that Reserve Bank of India has come with, risk additional risk assets. And that is the reason the banks put a certain amount of control and moderation on this unsecured loans. Having said that, banks today can boast of having a stable asset quality. And we are going to measure stable asset quality by looking at the NPA, that is the non-performing assets. Non-performing assets fell to a decadal low of 3.9% in March 2023. And it was just 3.2% in September 23. Credit deposit ratio, another metric which is very important, was very high at 80%. At 80%, if the credit deposit is going to be ratio is going to be so high, definitely you can expect that there will be liquidity issues. But be that as it may, it continues. Another important thing during the the fourth quarter, that is from January 24 to March 24, there has been a easing of treasury yields. Now, this particular easing of treasury yields will bring in mark to the market gains in the fourth quarter. And that should prop up the profitability of the banks to a certain extent. As I was telling you that there is a moderation on unsecured loans because of higher risk weightages. Now, this higher risk weightages on unsecured loans, one, and repricing of deposit rates has cut the margin by almost 5 to 10 basis points in some cases. Of course, the bigger banks, there has not been much of a change in their NIM, but the smaller banks have really found that their NIM has decreased by about 5 to 15 basis points. So this, in short, is how the banking sector performed in FY24. Now, moving on to the outlook for the banking sector in FY 2025. How is the banking sector going to look? Now, ICRA has revised the outlook for the banking sector from positive to stable. This itself means that there is going to be a slowing process in the growth of the banking sector. The credit growth would definitely be there. Profitability is likely to moderate. Bank's net interest margin is likely to narrow because there is likelihood of the credit cost going down. Repricing of credit cost is likely to happen. Of course, that would depend on at what point of time Reserve Bank of India is likely to bring down or likely to have rate cuts. The banks are going to be supported by lower operating costs as well. So as I was telling you, expectations of a rate cut in the second half of FY25, this could definitely lead to a margin pressure due to downward repricing of advances. On one hand, you have repriced the deposits. On the other hand, repricing of advances and a downward repricing of advances could also affect the. But overall, earnings are likely to be very healthy, and these earnings will be more than adequate to meet regulatory and growth capital requirements. Credit deposit ratio is likely to be at the elevated level of 80%. And they are likely to pose significant challenges on the liquidity front, just as it was in FY24. So there is going to be no change on that particular aspect. Now, when we talk about gross NPA, because for the banking industry, it's absolutely important that it has a stable asset quality, right? So, and this is best reflected in your NPA figures, that is the non-performing asset figures. Now, here is what ICRA has come out with wonderful figures, and I hope this is what it is, because that would mean a lot for the banking industry. ICRA's report says that the gross NPA is likely to decline to 2.1 to 2.3%. And the net NPA is likely to be around 0.5 to 0.6%. And this is what is going to be achieved by March 2025. And this, if you compare it with the figure of March 2024, the figures were 3%. So from 3% to 2.1%, that's a great jump. That's a great downward slide. And when you talk about the net NPA, it was 0.7% in March 2024. It's likely to come down to 0.5 to 0.6%. That again is a wonderful number. So the banking sector's performance is likely to be stable and is likely to exhibit a decent growth with a slight nip in the NIM. With this, let me take leave of you. I'll be seeing you in another episode. Till then, bye bye. Take care. Ciao.